Financial Planner. Follow us on YouTube.
Rob, thank you so much for joining us today.
Pleasure to be with you again, Elijah.
All right, now I'd like to start off with the news out of Catalonia. About a week or so ago, the Catalan people voted in an overwhelming majority to secede from Spain, and now just on Monday, they, wrote a declaration of independence, and there's been a lot of pushback by the Spanish government saying, you can't do this, this is unconstitutional. What is your perspective on what is happening right now for Catalonia, and also how this fits into the bigger picture and the growing sentiment of nationalism we've seen around the world, with Brexit and Trump and so on, and the movement away from globalism?
Well, the vote to become independent in Catalonia is symptomatic of a growing desire of peoples around the world to reject the forces of globalism. And I mean, what globalism really represents, Elijah? Let's not forget, it's a system that imposes rule from an unelected technocracy, where the people that are assuming control over populations is like a very distant and let's just say unresponsive or uncaring or unknowing of the needs of people who they're going to be ruling. I mean, it's you spoke in your initial words. You spoke of a pushback by the Spanish government. The pushback has been greater than just the Spanish government. There's been pushback by the European Union itself, with the likes of the head of the unelected European Union, Juncker, stating to Catalonia that if they're to separate from Spain, there would be no room for them in the European Union. So these are at least in my view, these are extremely harsh words. And I mean, the vote in Catalonia, it can be seen in no other way as a stern rejection of globalism, and this rejection of globalism the world over is growing. So this is a movement that, in my view, is now unstoppable, and it's going to continue to grow.
All right, now moving on here, I'd like to move our focus to viewers' questions. This first viewer's question has to do with people's pensions. What is your perspective on the factors that will cause Western economies to experience pensions apocalypse?
The reason why pensions will suffer apocalypse is because pensions invest assets on a more or less conventional framework. Usually it's a 60-40 split between fixed income and equity. And when pensions were established years and years and years ago, they had built-in assumptions for returns on the two sides of their portfolio, be it fixed income or equity, and they've modeled in basically a minimum of 5 to 7% annual return from their fixed income portfolio, and those returns have not been achieved. You've got a 10-year bond yield at roughly 2.25%. These guys have not been making their nut on the fixed income side of their portfolios for very, very many years. And the only companies in America that have been making their nut, so to speak, on their pension accounts are the companies involved in the military-industrial complex, because they all had riders built into their agreements with government that should there be any shortcomings in their pension accounts, they had the right to increase the cost of what the government was buying or procuring from them to make up for the pension shortfall. And this, Elijah, is why you hear stories that come out of the military-industrial complex from time to time, how a toilet seat can cost $800. These sort of escalators that are built into the procurement contracts with the defense contractors are such that their pension funds remain whole. But in the private sector, if it's GM, Ford, or any other big legacy company, their pensions have been underperforming for a great many years, simply because interest rates have been driven to unnaturally low levels, and this has effectively been a noose around the neck of legacy companies with pensions, and particularly companies with defined benefit programs versus defined contribution plans, and the difference being one flavor. There are two major flavors of pensions. One flavor of pension guarantees that you get a certain level of reward, and that's the defined benefit plan. And the other flavor is the defined contribution plan, and that flavor of pension provides that the pensioners will get whatever the funds can buy. So one of them is a lot more sensitive to inflation than the other, and most of the legacy companies like Ford, GM, the airlines, their pensions for the most part have been defined benefit, and they are just not making their nut because, when the pension was set up, they were expecting to return 5 to 7%, and the returns instead have been sub 2%, say, or sub 2%. And when you're talking about assets invested being maybe $100 billion, you've got, even if you've got $40 billion, like in a 60-40 split on a $100 billion pool of assets, if you've got $40 billion invested and you're expecting to be earning 5 to 7%, and instead you're only earning, say, 2%, your expected return is less than half of what you've budgeted for. And that creates a very, very, very big hole, especially when it's compounding year over year. And so, yes, the pension system. Let's just say the pension system in the Western world is in big trouble.
This viewer is wanting to know about pensions again. They're saying that, the stock market is at all-time highs and most pensions are in the market. So they're wanting to know, why are pensions failing?
Well, I mentioned this just a minute ago, because the fixed income side of their portfolios are grossly underperforming. And while the equity markets have been doing relatively well of late, one might want to consider just why equity markets are doing well. When you've got entities like the Swiss National Bank, a central bank in Europe, having a equity portfolio of $100 billion worth, and let's not forget that the Japanese central bank has something like, I believe it's I read a number, and this was in the last couple months. The Japanese central bank, I believe, has 75% of all the ETFs issued in Japan on their balance sheet. So the equity market's been held up with money that's been printed and created out of thin air. And, what it seems to me like, Elijah, is that what the world is really doing is playing a big game of musical chairs. And we've got 300 or 400 people circling. This is a somewhat of a metaphor, but we've got 300 or 400 people circling 5 chairs, and the music continues to play because the central banks are the minstrels playing the music. But what happens when the music stops? There's going to be a lot of people looking for chairs, and there'll be very few chairs to go around. But the equity market's been held up by central bank money printing. Plain and simple.
Now, speaking of, when the music stops, this viewer is wanting to be prepared for that, and he's talking about preparing food, drink, medical supplies, and so on. And they're wanting to know, if you have to choose between right now paying down debt or, how do you make that decision?
I think it's a very tough decision. In an ideal world, you would be rid of debt, and you'd have provisions. It's a balancing act, and who am I to say what the proper balance is for any one person? I don't believe there is any hard and fast rule pertaining to anyone in as a generalism, because the ratio of debt to provisions would probably depend on how secure your income is, how close to retirement you are, where you live, and there may be another host of factors, and these factors change from person to person. So, one needs to take heed and maybe take the responsibility of doing a good review of their own personal situation and make an informed decision, based on the facts in front of them.
Moving now to this viewer question from Eddie Jones. He's wanting to know, what is your perspective on the coming chaos in the financial markets and why most analysts recommend only holding at most 10% of your portfolio in precious metals? His opinion is that it should be much higher. What is your perspective?
I would agree. Look, I don't believe that the issue is a coming financial crisis. We are in a financial crisis right now. Plain and simple. Government spending is not under control in America, at least in my view whatsoever. We have countries around the world abandoning the dollar. Venezuela, the latest one to make headlines. But even leaving aside Venezuela for a minute, we recently, and literally in recent days, we've seen the announcement of Saudi Arabia doing a major arms deal with Russia. And Saudi Arabia is the linchpin supporter or progenitor of the petrodollar standard that the world's been on since President Nixon closed the gold window in August of 1971. So a shifting of Saudi Arabia into the Russian sphere of economics does not bode well for the dollar whatsoever. And that's not to mention, because that's all compounded on top of countries around the world, whether it's China, whether it's Japan, whether it's Iran, whether it's these countries are all cutting bilateral deals with one another, where they basically exclude the dollar from international trade. And this is a growing problem, and this is a tsunami that's coming the way of the, let's just say, the U.S. dollar edifice, which has ruled the world now for 60 years, and it's in big trouble right now.
Now, one of the big things that could really be bad for the petrodollar is the gold-backed oil's futures contract denominated in yuan that China plans to introduce. This viewer is wanting to know what your thoughts are on this development.
Well, that's all part of the movement that I referenced just a minute ago. The world is moving away from the dollar. And, this is something that's near and dear to my heart, and it's worth bringing up right now. A well-reasoned person might want to ask themselves, why are countries moving away from the dollar? What is the big rush to move away from the dollar? Well, I would to anyone who wants to listen, I would have it that the reason they're moving away from the dollar is because countries around the world are very aware that America's been rigging markets. They rigged the precious metals market. They've rigged the bond market globally, and this stuff has really stuck in the craw of countries that work for a living and produce natural resources, and they have to sell them. Historically, they've been selling them in global marketplace for U.S. dollars, which are created out of thin air, which are backed by nothing, and they're at the plight of whatever America chooses to rig the price at, rather than what these natural resources might really be worth. And my position on the rigging of the metals markets and the bond market is well on record, and I don't really think I need to jag off into a huge description on that. But countries are fed up. Countries are just fed up because America's acting like a bully in world markets. And countries have been taking it for a great many years, and they're finally sick of it.
This viewer is wanting to know, do you think it's possible for Western central banks to keep the facade going for years or decades of stagflation like in Japan?
No. In a word, no. Because the underpinnings of the petrodollar are eroding much too quick for this to be a long-term possibility.
So looking at like a timeline, how long do you see this lasting?
It could be days, weeks, or months. I don't think it goes years.
This viewer is wanting to know about the precious metal mining sector. They ask, the precious metals mining sector has been relentlessly naked shorted by market riggers over the past 6 years. Is it being done to keep money flowing into the fraudulent stock market and to stop gold and silver prices from taking off?
Well, listen, extraordinary measures have been undertaken to keep the precious metals sector from gaining any strength. My view regarding mining equities, I understand the principle behind the leverage that's supposedly in the mining stocks should the price of precious metal take off. But to me, therein lies the problem. Until the price of metal is freed from its rigging, true values are never going to be realized, at least in my view, on the mining stocks. So my view is buy physical metal first and foremost, because it's the demand, and it's going to be the off-taking of physical metal from the marketplace that's going to end the rigging of markets long before the purchasing of equities will accomplish the same end. So you see, the way it works in the world, Elijah, most of the selling of what we refer to as precious metal is done in paper form on futures exchanges like the COMEX or the LBMA. And it's well documented that for every ounce of physical metal these exchanges have in their warehouses, anywhere from 100 to maybe up to 500 ounces of paper are sold in the marketplace. And the way our price discovery systems are set up through these exchanges, the exchanges cannot tell the difference between a physical ounce and a paper ounce, and it's the Achilles heel of the rigging is the physical ounces. If they're taken away from the price riggers, if they're taken away from them in sufficient quantities, the whole system sort of collapses on itself. So in my view, you're never going to recognize or achieve what would be a fair market price for any mining stock until the back is broken on the price suppression of the underlying metal, and that's why I say buy physical.
Mikey Riley is wanting to know, if COMEX silver was oversubscribed some 4 times this year, including the current delivery month, why is there no backwardation?
Well, there has been backwardation at different times. I don't know if there's I haven't even looked, to be honest with you, probably in a couple months. But at different times, I know we have been in backwardation, and maybe a bigger question or a bigger answer to that is we've seen the open interest in silver like in the past 12 months, we've seen open interest at absolute record highs in silver. And when I say record highs, I mean record highs that have dwarfed former record highs from years earlier. So people are maybe it's a little bit, I don't know whether you call it Stockholm syndrome, but people are getting used to the notion that we see these massive builds in paper, and regulators seem to sit on their hands and allow this to go on, forever. And and it could be that people are, have grown accustomed to the notion that, banks can sell in paper form silver that doesn't exist, will never exist, and that this can go on forever. But realistically, I don't believe that's the case. And the reason I say that is for the following reason. At some point, there will be physical shortages of physical metal in the industrial marketplace at some point where people just can't get it. And when people can't get it, this paper pricing system will be discredited. And once it's discredited, the game changes. This will happen. It's a question of when it will happen, in my view.
All right, now moving to our last viewer's question from Keith. Keith is wanting to know, I would like to know why cryptos are any different than fiat currency.
Well, the difference between cryptos and fiat currency, let's just take Bitcoin as an example. We know how many Bitcoins there are in existence. And when it comes to fiat currency, we have no clue how much fiat money there is in existence. We do not know the true scope or size of U.S. money supply. Yes, the Federal Reserve publishes data of monetary aggregates and the monetary base, but, at least as far as I'm concerned, I know for a fact that the U.S. Treasury Exchange Stabilization Fund has within it dark dollars that are not even acknowledged to exist. And I believe that the amounts of money that are sitting in the Exchange Stabilization Fund very likely tally into the trillions. And this is not being counted as official money supply. So at the end of the day, we don't know how many fiat dollars there are in existence. I mean, I find it very interesting that America, who runs trillion-dollar deficits on an annual basis, leadership in America will always say that they don't have the money for Medicare or to make Medicare right, or they can't afford this humanitarian program or that humanitarian program because it might cost $1 trillion, or it might, over so many years. But there never seems to be a question whether America can find an extra $2 trillion for a new war in the Middle East. There's never a question of whether they can afford $1 trillion on a new military campaign or a new weapons program. I mean, it's really a farce to sit and listen to politicians in America talk about there being no money. There's no money left in the cupboard, and yet trillions and trillions and trillions and untold trillions are allocated to the military-industrial complex. And then we have the likes of the Pentagon coming out and saying that, as Catherine Fitz has reported recently, picking up on the work of Dr. Mark Skidmore from University of Michigan, a PhD economist with a research team, saying that the Pentagon has $21 trillion in undocumented expenses. So the Pentagon has lost $21 trillion. So how many dollars? Like, where are the? My question, it's rhetorical. Where is the $21 trillion in missing dollars? Where is it? Who has it? Who spent it? Where did it go? Is it sitting in the Exchange Stabilization Fund? It wouldn't shock me. But I mean, and if this $21 trillion that's missing if it's sitting somewhere, what does that do to the monetary aggregates that the Federal Reserve publishes? As far as I'm concerned, it makes the Federal Reserve look like a bunch of clowns. Because all that money had to be, and did factually move through their system. Because they control it. So where's the money? And how much money is there really? So this speaks to the notion of why cryptos are gaining respect in the financial universe. Well, the dollar isn't. Because nobody knows how many dollars there are in existence. But cryptos have finite, absolutely finite, and we know how many of them there are in existence.
All right. Well, Rob Kirby, thank you so much for sharing your insights today and joining us today on the show. Any last thoughts you'd like to add, and where can our viewers find you online?
You can catch me on the web at kirbyanalytics.com, and my recommendation is stay long physical metal. And in the end, physical metal, it's insurance. And when you're living in times where you can be almost certain that your house will burn, owning fire insurance is a very good thing.